Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over data. And so, Unity software, this one came down to my level. I'm curious to look at the options data, though. I don't think it is, showing bullish signs just yet. But I just kind of wanted to go over how we had this neckline here. I'm going to actually make that line thicker just because it was a notable level neckline for this inverse head and shoulders. Got this nice move to the upside, and I can actually remove the 786 from there because that is not necessary. And so I've got that done. I'm just going to make sure that that should be the low of 1390 and then the high from over here, which was 2340. And so I'm going to lock that into place, make sure 2340. Yep, so that's good. I'm just going to make this thicker so it stands out, make it light blue. That was an important level. And then also, we have this uptrend, which I drew kind of casually. And so I might actually fine tune that. It's a trend line, but I want to draw that as a ray, get it right to the point. So 1390 there, and then whatever the low was over here. And so make sure that is 1390, and then the low from which day? Let's see. So I'm going to move this just over here to 1790. I think I need to. Oops. I want to pivot it. I don't think that's correct. So 1729, and yeah, that does look like it's still over there. So I'm going to lock that into place. Just make sure the numbers are right. And I'm just going to delete that 3, make it a 0, and actually just make sure that's, yes, correct still. And make that line notably thicker. And yeah, I think it's fine being white. And so, when we had came back to that level over here, that corresponded with the 618, or really the golden pocket here around 1750. And we got a very nice bounce there that also corresponded with a retest of this trend line here. And so now what we see, this is locked into place. Also going to, I don't know how thick I want to make that. I'll make it pretty thick. Actually, no, I don't need to make it that thick. That's fine right there. Maybe I'll make it yellow though, so that stands out. And we also do have this gap here at 1973. That gap has been filled though, so I'm going to make that line solid. And do have this alert here at 20. In the pre-market, we are up above 20. Closed yesterday at 1944. And I think that this is a dip buying opportunity. Maybe we're going to get some tweets from Warren Kitty that are suggestive of Unity software, or maybe that's just coincidence and it's only GameStop. Who knows? But Unity software does do stuff with games. So, I think that there's a potential there. There's this headline from TipRanks. Unity software continues its losing streak as layoffs slam use stock today. And so, I think that kind of headline is maybe it's a dip buying level. We do have the 786 here, just going all over the place here at 1973. I think I mentioned that. There's also this gap here at 1980. Tons of levels were below them, and I think that this is kind of a fake out dip buying opportunity. And that this is going to be going higher. And so let's look at some of the options data with Unity software. And I'm actually going to pull up my options theses because I have and have been accumulating some of these. One of them is the $42 strike call that expires in June. This one's a little bit more risky. This is one that I've been accumulating, and let's see, my average is higher than the current price. I'm thinking, I want to add to my position on this one today. I think I had a limit buy order at 20 cents, but I think I might want to up it to 20. I have 10 of these contracts with an average price of 63 cents, so I could most definitely be getting this down, with the high yesterday being 25 cents, the low being 22 on Tuesday. The 11th, the lowest 20 cents. So yeah, I mean, I just think that this is like getting into dip buying territory based on the chart, but let's look at the options data here in just a second. The other contract that I've been following is the $65 call. This one expires in January. I've gone over in videos on Unity Software why I think it could be heading up to, I believe, 75, which is going to be, if I do flip over to the chart, based on this neckline up here, that being the level around 45, that would be the neckline, and then a measured move would bring it from 13, 14 up to 45, and then a measured move that's around 30. So add 30 to from around 15 to around 45, that's a change of around 30. And so adding 30 to around 45 would put it at around 75. So that's why I've been looking at the $65 call. And I actually do have some of these. I think I just have one. My average, dang, is $1. I just have one contract, but this one, the lows in the 20s, 30 cents. So, this is one I gotta consider adding to. But I want to do that based on data. I don't want to jump the gun. I want to be informed about this trading. And so what we can see here, also earning expected on the 20th, so during the pre-market. So maybe that's something to be aware of. But what we can see here is price in yellow yesterday on the 12th was more or less flat. We do have a net put premium going up a little bit over here, but then net going down over the course of the day. We do have net call premium being negative for the most part for the duration of yesterday, but being less negative than the net put premium. And so looking at the data over here, net put premium came down by $200,000, whereas net call premium came down by only about $30,000. And so that is, net bullish. Looking at the bear bull slider, 45% on the bullish side. There's more selling of puts than calls. That means that there is, the bottom potentially being formed. Not necessarily that it's going to start taking off, but this is, bottom signs. So let's look at just, the past 3 trading days. So this is going to be Monday, Tuesday, and Wednesday. And so what we can see in this is, net call premium coming down on Monday by over $840,000. So that's getting close to $1 million. That's kind of bearish. But then over here on Tuesday, net call premium coming down by only $461,000, whereas net put premium came down a lot more versus on Monday, and that came down. Net put premium came down by nearly $80,000. So we have net call premium coming down here. That looks bearish. Then we have it coming down less. That looks less bearish, on top of more net put premium coming down. So that is maybe suggesting a bottom's coming in. And then we do see, net put premium being more negative than net call premium. So these are potential bottoming signals. And if we look at the past 30 days, just to show all of the data, we do have, stock price going up here, coming down, being sideways, effectively a bear flag, and then coming down more. And we do have this big wick coming down. Well, it looks like a wick, but this is the net put premium coming down $2 million on January 16th. And so that is potential that a bottom is being formed, but not just yet. Looking at the chart, we are at this technical level, a fake outbreak below it, earnings coming up. I think that this could be heading to around $33, if not higher, and that $33 is based on a Fibonacci extension that I have drawn over here. So I think that looks just great. And I wanted to cover this during pre-market prep because I want to add to those call positions that I have. And for me, I do have some shares. Maybe I would add to that. But I am really excited about the $42 strike for June. That corresponds with getting back up to this neckline here. And so by June, could that happen? Let's see. Let's draw a little bit of a doodle here. Could this happen by June? I think that could happen by June 20th. Actually, based on my doodle, that looks like it would be hitting that level on July 4th. And on that day, the market is closed. So good to take that, with a grain of salt. But that is just what I'm seeing there. And I'm going to make that a light blue, a very soothing line. I think that this could be happening. And if it only gets up to 33, this contract would probably be printing, so I feel good about that. 65, I think I'm probably getting a little bit ahead of myself, because if we were to get up to here to form that inverse head and shoulders pattern, we would then have to, from here, pull back, maybe coming down to around here, and that would then be getting into January of next year. And so I might actually make that line a little bit, thicker and make it actually red, because I don't think that by January of next year we will be going up to 65, but I think that by January of next year we could be completing this inverse head and shoulders pattern that would then result in a measured move of, let's see, if I do take it from the bottom here up to that neckline, that would result in a move up to around $75 a share. So I feel really good about Unity Software long term. And in the intermediate term, in the immediate term with earnings coming up, I think that what we are seeing is an excellent dip buying opportunity, testing this trend line again, but faking out breaking below it, making people panic a little bit before we start to see this move higher. So yeah, I am really excited about Unity Software. And so, I just wanted to share that with you guys. But, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching, and take care, you guys.